What is up, everybody? Steve here. I hope you are doing well. Today we're going to talk about Realtor.com's monthly housing reports for July 2020. And then also toward the end, we're going to talk about some of the top metro areas that we're going to look at with the highest amount of inventory coming to market. These markets are going to be primed for getting better deals in the next 6, 12, 24 months. So it's a good idea to keep an eye on these reports. And as always, I'll put the link in the description so you have full access to this information as well. So let's dive into some key points from Realtor.com in this report. The first thing we want to look at is active listing inventory of homes actively for sale on a typical day in July increased 30.7% over the past year. This amounted to 176,000 more homes actively for sale on a typical day in July. We are still extremely low in terms of an unhealthy real estate market because the amount of inventory. I always say we should be about 5 to 6 months supply of inventory available, and we're about half of that. So we still have a long way to go, but we're really starting to see an uptick in terms of inventory coming to market, which is a really good thing. And if we look at the graph, we can see this where you can see just a tremendous spike in terms of the amount of inventory coming to market compared to other years, 2017 to 2021. The number of active listings in July was 15.7% below 2020 and 45.4% lower than pre-pandemic 2017 to 2019 average. The total of unsold homes nationwide, a metric that includes active listings and listings in various stages of selling process that are not yet sold, was up 3.5% year over year. The first time this measure saw positive and annual growth since 2019. And obviously we can see the chart here again going up significantly here. The inventory of pending listings on a typical day has declined 19.4% compared to last July. This is a further deceleration from 16.3% annual decline we reported for June. The moderating buyer demand has spurred by rising interest rates and all-time high listing prices. Look at this, guys. We can see a stark decline right here. And now, I think a big thing that we have to take a look at, and where I think that people are going to be in trouble coming into a recessionary environment, is the cost of affordability. And right now, people are getting themselves into really bad situations. They're overpaying for real estate. They have been overpaying for real estate based on the amount of money that they make. In some areas, the cost of the housing is about 65% of their take-home pay. And that anything over 40% is bad. So, there's going to be a lot of people that are just going to be sitting at home. They're going to be scrambling, figuring out what the heck they need to do to get out of the situation. So I think a lot of people are going to be in situations where they got overextended, and they're going to need to either house hack and bring some people in to offset that expense. They're going to have to get a second job. Their significant other is going to have to go to work, or they're going to have to sell their property, which I anticipate the latter. I think that more and more people are going to sell their properties because they just cannot, despite the interest rates that they've received, they cannot get themselves into a situation where they're comfortable, and they're going to have to sell their properties. In July, newly listed homes declined by 2.8% compared to the same time last year, breaking a 3-month streak of positive annual listing growth since April. Sellers may have felt that they missed the peak, or that it's too difficult and expensive to buy another home at this time given the cost of financing, a concern that could affect nearly 3/4 of potential sellers per recent survey data. I don't know, it sounds overly positive in my opinion of what Realtor.com is putting out here. But as you can see, it's just been a significant increase. And yes, in July it dropped 2.8%. In my opinion, I think if we keep an eye on this, and we'll bring this data to you every single month, I think it's just going to start to shoot back up. So let's keep going. The typical home spent 35 days on market this July, which is 2 days less than last year, given that home sellers are slowing their pace of listing and pending listings are declining. We expect on market to increase compared to last year in the coming weeks. However, while time on market is expected to increase from record lows, homes still spent 26 fewer days on market this July than typical 2017 to 2019 timing. And yes, in the past few weeks, we had mortgage interest rates drop, and a lot of people who are on the sidelines that are still kind of that FOMO. Unfortunately, they're going to get caught holding the bag, and I think that that's what caused an influx of people coming to market and reducing time on market for the current inventory sitting on market. So unfortunately, I think some people are going to get themselves into bad situations still. Median national home price for active listings declined to $449,000 in July. That's still just mind-boggling how expensive a home is. I'm still astonished of how high prices have gotten, even in our local area in here in Southwest Florida. You know, areas where blue-collar people and you know, the average Joe just trying to get by is spending, you know, high 300s, $450,000 for a single-family home, and something's going to give, obviously. It's down from an all-time high of $450,000 in June and mirroring the seasonal trend seen in 2018 and 2019 when prices have peaked in June and eased in July. This represents an annual growth of 16.6%, a slight deceleration from last month's growth rate of 16.9%. And obviously we can see the median listing price here, and you can see it kind of just starting to flatline here. And again, I think we're going to see it on a decline. The share of homes having price reduced increased from 9.4% last July to 19.1% this year, and is close to typical 2017 to 2019 levels. And this is probably the most significant chart besides new inventory coming to market that we should be paying attention to. But look at this. I mean, this chart really says a lot. All right, now let's jump into the top metros in the United States, and two areas that I really want to just pay attention to, and I think everybody should be really keeping their eye on, is the active amount of listings coming to market on a percentage basis, and also price reductions as well. So if we scroll down again, you guys have full access to this. This is July housing overview by the top 50 largest metros, and I got this highlighted as well as this. This is the active listing counts year over year on a percentage basis, and then also price reduced share. Let's concentrate first on active listing counts. So these are areas that I believe are going to be the hardest hit in terms of the amount of, you know, the more simple supply and demand. The more inventory is coming to market, the less demand we have, and it's just going to equate to better deals for people in these areas to get a better deal in the future, if not right now. So if you're in these areas, don't be afraid to make offers and take your time. Again, don't get yourself in a situation where you're over leveraged and eventually you're going to put yourself in a bad position. But look at Austin, Round Rock, Texas. We got 154% increase in inventory year over year. Let's go down to Dallas, Fort Worth. We got 81%. Denver, we got 70%. If we keep going down here, Las Vegas up 83% in inventory. We got, look at Nashville right here. Nashville, Tennessee, we are up almost 122%. Orlando, it's up 67%. Look at Phoenix, Arizona. Look at this, 158% increase year over year of inventory. Raleigh, North Carolina, 137%. We got Riverside, 76%. We got Sacramento, 72%. San Antonio, almost 70%. We got Seattle, 103%. Tampa, St. Pete, Clearwater, 92%. And now let's jump over to the percentage of price reductions in certain markets. So we got Austin, Round Rock, Texas, 40% of listings have been decreased in prices. We got, let's scroll down to Dallas, Fort Worth, 27%, Denver, 30%. We got Detroit, 23% of listings. If we go down to Jacksonville, Florida, 21%. Look at Las Vegas, 43% of listings. Los Angeles, almost 20%. Nashville, Tennessee, 26%. New Orleans, 22%. Orlando, almost 21%. Look at Phoenix, 43% of listings have gotten price reductions. Portland, Oregon, we got 28%. Raleigh, North Carolina, we got 21%. Riverside, 23%. Sacramento, 30%, almost 31%. San Diego, we got 25%. San Jose, 21%. Seattle, Washington, 24%. Tampa, Clearwater, St. Pete, we got 26%. Again, you guys can access this information and let me know what's going on in your housing market in your area. You guys seeing an increase of active inventory, or are you guys seeing an increase of price reductions in your inventory as well? I appreciate you guys commenting below, and I'll see you guys on the next video. Thanks for being here.